Open this week, starts today, Thursday. There's usually 500 to 700,000 people who come to that golf tournament. You know, I'm talking
for forever.
for 4 days. I mean, it's 5 days actually, because it's fun to show up. I've never gone because it's such a madhouse. So this year there'll be 20,000 people total over 4 days versus usually about 500 to 700,000. So you think about that. That is a phenomenal hit to anybody in the service that you're just not going to recoup. Now the stock market is betting that all that non-spent money will show up, of course, once you wind down the fear of COVID and all these people have this. So I'm not going to lock up with that. That may well be, or some people don't think it because they don't think that people will spend the savings, that this has scared them, and the people who are getting most hurt aren't in a position to spend it anyway, and they much rather pay down some debt and stuff. So you know, there's a lot of things that are truly uncertain. People talk like it's guaranteed outcomes. It's not. You know, I'm going to quote Louis Gavay. I'm not being paid to forecast. I'm paid to adapt, and I will adapt. But part of that adaptation is then what comes out from the Biden stimulus package. Is there going to be a massive green infrastructure play? You know, these are things we really don't know yet. So again, I'm spending my time adapting, and I'm watching, and it really, I find it, I'm not going to say humorous. I find it interesting is a better word. With the curves are steepening, which I think the equity markets are reacting right as the curves steepen because they don't have a fear. And on the short end, money is not going to be tight. And yet, I think some of the commodities and other things are reacting to the higher yields on the 30, 10 and 30 year, but especially the 30. But again, we've never been here. We have never been here. So anybody who says that they know, and this is not Japan, but as this curve steepens, that's again the fulcrum or the lever that is moving this market. Now we lost that narrative for 3 or 4 days as Reddit and Robinhood ran wild with the headline stories. But for the last 2 days, I think you've been back in the throes of it. But the equity markets are seeing what Powell talked about, which is, hey, it's not us, it's not easy money, it's the fiscal stimulus. You know, I thought that was very disingenuous, by the way. I still think it's, but if that's the way the market's seeing it, that's the way the market's seeing it. But I'm really intrigued how this steepening, which is usually negative of the currency, by the way, historically, it's bullish to metals, but we've never seen a steepening at the zero bound when inflation looked like it was starting to heat up a little bit, meaning raw material inflation and maybe wages. We'll see. Wages will be interesting tomorrow. That'll be the one area I am really paying attention to, because again, are the average hourly earnings gains due to the fact that the people at the bottom are being still forced out of the market, even though we saw today's jobless claims, but that they're not partaking, and the people at the top are meaning the top 30% of the wage force getting all the what there is to get. So there are a lot of things to be aware of. And I love that the curves are steepening, because if they steepen even more dramatically, and again, they get a free run here. You get a free run. It's one of the only places you can play in the debt markets where the Fed is really not playing. Yes, they buy mortgage-backed securities, but they're not buying the long end of the Treasury market in any great shakes. It's all being done towards the short end, because the Treasury is pushing all the borrowings out in the short end, and that's where they're playing. So we've never seen a steepening, as to use the Fed language, at the zero lower bound. This is going to be interesting, and I don't know how long this is going to be. I can't time it, but I know that it's a very interesting development, and we'll see if the central bank has some language to it. Now, I don't know. I haven't seen any stories yet. Maybe somebody else has, about the meeting that Yellen had today with the SEC, the CFTC, basically FISOC, the Financial Stability Oversight Committee. Well, I don't think it was officially that, it was just with the head, so.
I mean, well,
But it's important, by the way. It's important because I want to hear what her language is to maybe slow some of the wicked, and that's what I'm gonna say, like a teenager would say, oh, that's wicked. The wicked volatility that's taking place. So that's what I'm waiting to hear from. And then tomorrow, the unemployment, I don't think it's really an important number, except for, again, I think hours worked and average hourly earnings are far more important. The jobs, again, I'm taking Powell at his word when he says that the real unemployment rate is 10%. So that part of the picture won't be that important to me.
I mean, I'm only looking at a couple of things. One, I'm looking to see if this 30-year yield breaks out.
Yep.
And then I think you get another 2 to 4 points down in the 30-year bonds. I'm looking at the double top in the SPOs. I'm looking at the target level in the Russell right here. I'm looking at the 200-day in dollar yen, and I don't know what was the exact opening range in the euro. We're pretty close.
Yeah, it is interesting. You know what? And I sold the euros last night, even though if yesterday I would have bought them on the Draghi news, because the Draghi news was interesting. And I think there's more to that than meets the eye, by the way, why it plays well. And the Italian bond market.
Oh, they're still going.
Yeah, because they get it. You know what? With Draghi running the show, and I thought this, and I really think this is why they want to do it. Italy can do whatever they want because Draghi knows where all the skeletons are. Can you imagine the ECB or Brussels, Frankfurt or Brussels, saying no to Italy fiscal stimulus? Not a chance.
Oh, look, and they've come all the way down to fill that rollover gap today.
Yeah, what a beautiful thing, huh?
Oh yeah, how long did that take? That only took 3 months, but it did it.
Yeah, this is and if you saw the German Italian, we went through 100 basis points today.
Yeah, well, it's. I got the chart up right now.
Oh, let me see. Now I got to put on my glasses. Yeah, you don't have it up in yields, though. You have it in the differential. Yeah, I know. That's where I get it too, because I don't have a Bloomberg that would give it to me, but I did see it. Let me see if I can get an update from somebody. Okay. Oh, I just got filled on my 30 years. I get those off. I'll be free and clear tomorrow. Let's see.
Yeah, that was a really nice low in the Italians last night too, and they threw them right back down to the 50.
You know what? And it's interesting that the euro is breaking on the compression of the European yields, because I mean, let's face it, that's what's been going on. All the ECB intervention across a gamut of 19 different countries, basically by 19 different sovereign debt instruments, they're crushing. So the different, and as the 30-year goes higher, you are seeing, or even let's say 10 to 10, you're probably now, if I was creating a basket based on the European capital key, I'm probably close to zero, if not negative, across building an entire basket. So that's an interesting, and that means that the 10 to the, now nobody does that synthetically. We keep them all separate sovereign but I think that there are algorithms out there that buy across the gamut and try to mimic creating a euro bond. I've thought that for a long time, because that's how it looks to me from the trade perspective. So very, very interesting things going on. Very interesting. And I know everybody's getting bulled up on the dollar. Every article.
We're at such a big inflection point in the currencies, the bonds, and the indices. It's unbelievable.
Well, I'll give you another good one. The euro sterling on that 200 week.
Yeah, I looked at that thing. Yeah, I want to look at that as much as I want to look at the US Steel.
I know, but it did break down today. Now, I don't know where it's gonna close tomorrow for the week, but it took out that 200-day moving weekly, the 200-week moving average day pretty soundly. So for all the people who, oh, this is gonna destroy Britain, you know, my attitude is, let's see, let's wait and see. Because right now, the pound is, it's the only currency up of the majors today.
Yeah, I mean,
And why?
and it was really pound yen, and we talked about that.
I know, the other day. And
The other day, and that's the one that's just been doing nothing but go up.
And why did sterling perform so well? Because the Bank of England didn't go negative today. That's because you see it turned as soon as the meeting at 6 o'clock Chicago time. You put up a 10-minute chart or a 2-minute chart, you'll see it. No change in policy. They didn't go negative.
Yeah, and that's a big one day. Yeah, right in the daily momentum, and boom, took off. Well, we got on that because you and you said that Bookvar liked the strong sterling story.
Yeah, but Peter's been very adamant about that, and he's right, because again, he too didn't buy the Brexit narrative that everybody was out there selling.
Yeah,
this was going to destroy the
yeah.
Brits.
And Silcott and I went into that, and we were looking around. And this was the only way you could play it.
Yeah, and you know what? And that's sometimes not sometimes, when that's what's given to you, that's what you have to do. So you can, that's like, creating a synthetic play. It's there for you to do, and you can do it with a low risk. I mean, that was a very definable risk when you look at that 200-week, and that's what we kept looking at, not the sterling yen, but the euro sterling.
Yeah.
Now, for all these people who are talking dollar up, then you know what? I'm going to start paying a lot more attention, which I haven't been doing, to the S&P DAX.
All right, let me pull that up.
I mean, not doing anything yet, just watching.
I got to go to a different page because I got it up over here. There it is. And it's just sitting on its 50-day.
Oh, let me put it on.
Just sitting on its 50-day.
Oh.
And NASDAQ DAX, that looks like it's got a little bit more oomph into it. The Russells totally outperformed the DAX.
The most beautiful thing is how that bond, that S&P bond, really, you know what? You were watching that 2130 to 40 to 50 level, and then boom, when it turned around and ripped, it turned around and ripped.
Well, I mean, just look at these things. You have, and I don't like chasing these, but but you have ORH week in NASDAQ bonds, ORH week in SPU bonds. The one that's been lagging is this monthly Dow. Here, am I on the right page? Yeah. This monthly Dow bond is making a new high. Okay. So it's coming up to, it's trying to trade the last year's high. January 20th high, before we had the big break. So it's already broken out of the down channel. And then if it starts closing above that high, then I think that's to me going to be run off week week 30 year. And you also have, your bungee call, that thing's just been rocking.
Yeah, I know. You know what? And I'm trading that like I traded Freeport. I just keep buying on the big breaks. And yeah, I got a $7 to $8 break this week, and I bought some. I bought some for my daughter, so she even was happy. So Sophie lets me.
And Southern Copper's about to go too. So if Southern Copper and Freeport start up tomorrow, they're going to go.
Well, and how can that be if this, that's why I like, I'm playing with this butterfly and I'm trading it. I am not married to it. So, when it doesn't work, don't call me. But platinum is up sizably for the week. Silver's down, what about 50, 55 cents, but gold's down $50.
Yeah. And the copper's trading in a range.
And that gold silver for the week, I got to remember to really stay on top of that tomorrow, chart wise. Let's see what that's doing for the week. Yeah, it's probably a little lower on the week. Let's see. Yeah, right now it's a little lower on the week, so I'll be very attentive to that. And it's way off the bottom, so I like it. I'm looking at it's. I get it as a freaking linear chart, which I hate. Whatever. It's because I'm an idiot. It's not anybody else's fault.
In what? So, gold, silver?
Yeah, that gold.
All you got. Have Stan show you how to click on it to turn it into a bar chart.
He has. I'm just too stupid to keep. It's right. But I'm looking at that August low down at on August 10th and traded down to 69.08.
Hold on. On the daily?
Yes, sir.
Hold on. I'm moving it right now.
Daily continuation because I don't look at anything else.
I got the active up, so I'm getting the right contracts.
Okay.
There's the August. There's September.
August 10th, you can see it. Yep.
August 7. That low right there.
What's that low? I can't.
That is 65.81.
Okay, yeah, but the settlement was 69.17, so I don't know why they ran it. So that is a very big level. But if it can stay lower on the week with all the shit that's going on, oh man. Oh yeah, people who were wild about this. Oh, silver, again, I looked at the 35 to 37 calls on Monday when they were trading 90%, and I got afraid of selling them. But let's see where that vol is on the silver. Let's go take a look. And I'm telling you, I forget what the high was, close to $2, if not over $2. And the vol was priced at.
Okay, so here I put up the. I put this up as a monthly now, and you can see where it spiked that 200-month moving average.
Okay, but the 37 calls for March, which expire February 23rd. I'm telling you, I believe I can't get a chart of it, so I just have to do it by what I was watching. They were $2. They're trading a nickel.
Ira, what can't you get a chart of?
The option prices for the week.
And tell them how to put up spread bars.
Someday you'll let me get on your system. I'll show you how to do it.
Okay, now you're not doing it now. I got too much shit going on.
Show them how to put up spread bars, will you please?
I'll even show them how to put a cloud up.
Oh my God. I live in the clouds.
Yeah. So here, that spread, Ira. If you look at gold, silver on the annual or semi-annual,
yeah,
you think you know where it went? Perry and I were talking about this the other day when you weren't in.
But where did it go? It went
It
to,
went to the screw you zone. It went to the X bar between the half and the 2/3, coming back down for the life of gold silver.
Howie 101, and it melted through that 200 week at 65.22. I'm sorry, 200 month. That was that big number I was looking at on Sunday.
Yeah, I'm going to send you that chart because
Stan, without me doing it, can you tell me what the high was on the March 37 calls this week?
Okay, hold on. What? Is that silver?
Yeah,
Okay.
so
let me look.
not only did gold silver go right to the X bar, but you basically hit the half in silver for the last couple of decades all at the same time.
doesn't get better than that.
No, you can't get a better match.
And the believers, it's again, League of A. My clients don't pay
Traded
me.
$1.24 at the high.
And what was the vol? Can you see what the high vol was trading for the? Can you
I
transcribe
can
that
try.
into a vol? Yeah. Because I know I was seeing 91 and 92% on the vols as I was watching it. Okay.
Yeah, it's right here, Ira. If you go right click on your toolbar,
Yeah.
go down, it says chart, it says more.
It says more. Oh, I see more, right?
Okay, and then it says spread bar. Check the spread bar.
Hold on, I'm going to it right now. Spread bar. I got spreadsheet trader. I got split quote board. I don't have spread bar.
Well, when you're on your gold silver chart or DAX Bund or whatever you are, right?
No, I'm on my quote board. Hold on. Let me go
Okay, go to that. Go to a chart itself.
God, I'm so fucking ugly and stupid. Wait, hold on. So I want to go to more.
Yeah, right click on the toolbar on the chart. Go to more,
Wait.
and you'll see you can elect.
See, on the left hand, you want me, that's where my spread bar is? See, but it doesn't, oh, wait, it's filling out. It's taking a long time though.
It'll take a bit.
So I see on February 1st on that bar, a 61.56 low.
All right, now one other trick. So you're looking at the right data.
Yep.
Go to right click on a spread on one of the bars.
Okay, I'll right click on one of the bars.
Go to modify spread bar.
Okay, I guess I see it.
Okay, you see interval?
Wait, you want to just right click on modify spread bar?
Yeah, right click on modify spread bar.
Yeah.
All right. So
I see
when
interval.
you're going to see interval, you're going to see 5.
Oh,
Okay.
mine says 1.
Okay. You have to go and click D, daily.
Where daily? I don't
So if you're looking at a monthly on out, you have to use a daily interval or it's going to try to drag in too much data and you won't see anything. And you
Oh,
won't
so
get any
that's D
historical
for
data.
daily?
What?
Okay, that's D, right?
Right. D for daily input.
Okay, let me see what happens. I just did it. Well, now, will that do it automatically for all of them?
No, you have to change them all the time.
But now all I'm getting is these little scruffy things. I'm not getting any bars to fill out at all. Hold on.
It should.
No. Go back.
Go to a long-term chart. Go to a monthly chart.
Hold on. We'll do.
Judd,
Yeah.
go hit display.
It's still coming up line.
Hit display.
Hit display.
Go over there. It says display bar. He has line. The white box under display. To the right. To the right.
The right. No, mine's
Oh,
on.
here.
There. There's a drop-down menu.
Yeah, that's what. But it's on the left, right?
So yeah, you can put bar, candlestick, or line.
See, I could go to a candle with it.
Okay.
I don't like the candles.
All right, I go in the line, but it doesn't. I go to bar, but it doesn't take it.
See, there's the candles, but I prefer the bars. Yeah, it depends upon if you're trying to, are you on a daily chart, a weekly chart, or a monthly chart?
I'm on a monthly right now.
Okay, so then you need to be on the daily input on the modify spread bar. The interval has to say D or you won't get anything.
Let me see. I'm going to go to it right now.
Ira, that option traded as high as 120%.
What's that?
That 37 call you were asking about, it traded as high as 120% that day.
I saw 91 or 92, and my hand was so ready to hit the price, and I go, all it's going to do is screw me up because it went to 120. I would have been going, you idiot. Okay. All right, Judd. I went into. I see split. I see strategy. I see spreadsheet. You know what? I'm not gonna work on this now. It's
All right. Well, you just need to do a remote Baumgartner with Stan, and he'll run you through the whole thing.
I'll set it up for you.
I know it's me. As George Costanza would say, it's me, Stan, not you.
Yeah. It just takes a minute.
Yeah. Just because if you don't put in the right input into the spread bars,
yeah,
you won't get the chart you want because the input will be all funky.
It's me, it's not you, so don't worry about it.
My favorite was when he would sleep under his desk all day.
Oh yeah. With the alarm clock. Love that. Come on, Silver.
Yeah. So, I mean, and that's the same thing in the silver fibs. They go up there. You can never fool with a big time, I was looking at fibs when I first started, and Ira sent me a note. And after that, I only started looking at the big time frame fibs.
Oh.
Because otherwise you're over trading. And you're trading the wrong levels.
Silver's had this has been an unbelievable week. Now, if it closed under, of course, 2470 tomorrow, I'd say, okay, it's over, but got a lot of work to do.
Well, it's unchanged on the year.
And you know what? Actually, the gold is, I'm hoping that it goes down more versus the currencies, but the currencies are under pressure. So, but those spreads have a lot of correction. They got so far out over their skis, so to speak, that I always go back. Depending on how far they got extended from 200 day, 200 week. It's been absolutely insane. I'm looking at the gold Swiss. If you
look at the gold and euro too. Here, I'll throw up the gold Swiss.
Yeah, you look at it on a 200-week movie. I mean, look at how overextended. It's okay.
And you got no RL week in the gold and euros.
Yeah.
Let me put up the right, I gotta change that to a 60.
For the moment, anyway.
Yeah, there you go. See, if you look at a weekly chart, you have to use a 60 tick input to get the chart to look right. Okay. Here's gold and Swiss futures, basically the same chart, dropping out of the cloud. Gold and dollar Swiss. That's interesting because that's coming down to the 50-week.
Yeah, it's a lot of interesting things to me going on right now. And you know what? You get sidetracked by all the noise, as always. But I think there's some people who got a lesson this week on markets.
Well, some of the moves have been that Alzheimer drug went from 60 to 126. It's back at 65. The AVXL was another name that people in the room traded and got out close to $30 this morning. It's back at 14.
Beautiful. Again, you're trading. You cannot get married to anything right now.
Which one was that, Judd? That was at 30?
That AVXL. I think because Cal was involved in that one.
And look at
Oh, yeah, that's
the
that one I said I didn't like because I don't like the product from a pharmaceutical standpoint.
right. Yeah. Wait, now look at, because the curve steepened, the bank stocks were busy in the correction mode. Then they get let away. I mean, then they rally big time.
Yeah, well, JP Morgan started out the day and then Goldman and,
Yep. And the regionals are doing great.
yeah, the regionals look great all day.
Yep. And Roberts, now his bonus will be so big, he doesn't have to work anymore.
Yeah, he'll disappear.
No, he's going to go looking at the, what was he? He was on a mission. But we know that the farmers are fat and sassy right now.
Yeah, and he just said they're just doing gangbusters and their demand in Brazil is huge, and even in the U.S.
Yeah.
So, and the gold and against the indices of really taking it on the chin.
I want to see the way the markets react to the unemployment, because you know me, I think it's right now, until I see otherwise, I just don't see it. And then there was a piece out from the Fed, the Minnesota Fed, Kashkari's, talking about how one of the most harmed group is new mothers by the COVID hiring, by the jobs. So again, more and more ammo, and I'm not even talking about inflation.
Well, this is what's going to get interesting right here, because you got this double top and you got a double bottom on the 100 by 3 in the SPOOs. So that's a 200 handle swing each way.
You know, and this will be the last thing I thought. You talked about the yen, and it is interesting that dollar yen is getting, now this is the cash market. Futures is, what's the let me see.
The 200-day and the yen futures?
Yeah, because a lot of people get confused and I don't want to confuse anybody. Let's see. I'll tell you right now. We're probably on that too.
That's right there, 9471.2.
Okay, so this is interesting to me. You know, I don't know whether the Olympics or not, there's some, Suga is polling very weak. So there's some political problems. But when the BOJ had its meeting, you know, they talked about getting, you know, kind of dispensing with yield curve control. If they, oh, no, it wasn't them. It was the guy who put that all into place, talking about that if Japan went on and did some fiscal stimulus to counter the impact from COVID, that it would be far better than what they're doing with monetary policy. Now, I put up here, and I'll show you how that works there too, because if they would stop with the yield curve control,
Yeah, but it's cold out.
What do you want me to throw up?
MUFG,
Really cold. I don't like getting cold though.
Oh, Mitsubishi Financial?
well, look at that.
I'll tell you what, you see that oscillator right there?
What's an
Ira?
extra hour? You can
Yep.
do it.
That is a really bad high.
Okay, that's what
And
we're gonna,
that's mashing the yen. I don't like it when I see that anything, you know, that's closing resistance there to me.
what's the price there?
489.
Okay. But look at the move that we've all of a sudden, and these stocks stink. And it's not because people are short, nobody's invested in them because they stink. They have a nice dividend. Put up MFG.
National Fuel Gas or something else?
MFG.
Mizuho. Okay. See, now that looks good.
Okay. These are to be watched because of Japanese policy. Now, you can also, if you want, put up the JGB, which is ZTH. That's the one I watch now. ZTA. Oh, you may not get it. ZT.
Hold on, I get it. ZTH.
Yeah.
Yeah, there it is. Yeah, and that's below the 200-week too.
Oh, yeah. And look at, you want to see something ripe, but of course it won't happen because, you know, they're intervening, but it does get interesting. But that's why I'm watching the Japanese bank stocks. I want to see if they will really reflect the change that's going on.
What was that other one again? Mizuno?
It's MUFG, which is Mitsubishi, and then Mizuno. Now you can go, do the research. I'm not touting them whatsoever.
What was Mizuho's symbol, MFG?
Yeah, MFG. And the other Mitsubishi, which used to be is Mitsubishi Tokyo, MUFG. But
Yeah.
they pay a nice dividend. They've done nothing. You want to see dead money? I'm embarrassed that I've owned them for as many years as I have.
I mean, this thing's got a chance, Mizuho's got a chance to go to 315 here on the monthly.
Yeah, that would be nice. Let's see.
But when you look at a quarterly,
Yeah, look at that one spike, back in June. I don't know what happened. We got up to,
it's January 13th. January 2013, it spiked. Then
yeah,
it double topped again in 14, 15.
it stinks. It's dead money. I'm embarrassed.
It hasn't done anything since the crash.
You know what? It's really like owning a bond with better upside potential. If you want to see something that would really do well with the rollback of quantitative easing across the entire globe, the Japanese banks would, I think, and the European banks. They've been crushed.
Deutsche Bank beat today. What, for the first time ever, they made money in the last 50 years or something?
Yeah, they must have had their squawk box into the ECB fix.
I
Maybe
haven't
Trump
looked
paid
at
him
it.
back.
I just saw the headline on that.
There's not a chance of that. Forget that.
Oh, it still looks terrible.
Yeah, shit.
Yeah, the last time we talked about it, I think it might have been the beginning of January or December. Look at it now.
Yeah, it's terrible.
Yeah. And they made money.
And they made money. Yeah.
And they made money.
Well, as the commercials used to say, we make money the old fashioned way, we steal it.
Yeah, this must be because they told Trump that they wouldn't finance him anymore.
You know, I don't know. It's just the European banks are shit because of the ECB policy. It's
Crazy.
tough money at negative interest rates. All right, I'll be around in the morning because I'm not doing anything except I want to be here for the first hour after unemployment for sure, just to see what happens.
Okay, well,
All right, Stan.
I recorded this. I'll put it out as soon as it's rendered.
Okay. All right, Stan.
Yep.
Again, it's me, it's not you, and we will get this done. Thanks.
I'm always